friend of mine once said, "The sun will come out tomorrow. Bet the government's dollar that tomorrow you'll get paid." Hello! So despite the sun being all around awesome, there are some pretty cool ways to make it shine a bit brighter for you. Okay, enough with the puns. Let's talk solar power. At first blush, solar may seem new agey and expensive, but the value you add to your house, the monthly savings on your bills, and the environmental benefits can really add up. And let's be serious, renewable energy is a great thing for the environment and your wallet. And if that's not enough, there are special loan types and things to make it easier. Phew, I'm getting heated. Installing solar is an investment. According to the Clean Energy Alliance, solar upgrades can easily cost tens of thousands of dollars. It may seem like a non-starter for some people, but that's where solar companies and the government are here to help. Both will provide special financing options and incentives to make things easier and get you on your way towards soaking in some rays. Let's talk through the three main types of solar financing: solar loans, solar leases, and solar power purchase agreements. Solar loans are the most straightforward type of solar financing. It's essentially your average loan, but lenders offer special rates for specific solar projects. There are two main types. You've got secured solar loans, which are similar to secured car loans. You have to pledge some sort of collateral in order to be approved. This could be any qualifying asset you have, like a car or home. And these loans usually have lower interest rates. On the flip side, unsecured solar loans don't require any collateral, but are usually more expensive. Thing is, you can only use your solar loan on the actual panels and installation. They usually don't give cash for maintenance, but check the terms. Also, the real trick is combining solar loans with tax credits and other financial incentives. We'll get to that in a minute, but first, solar leases. A solar lease is when a solar company installs the panels on your house, but they own them. You only pay for the energy you use, not the equipment itself. Depending on the company and type of lease, the equipment and maintenance can be covered, or it can fall to you. Like with any contract, know what you're getting into before signing. Power purchase agreements, or PPAs, are just like the lease agreements, except there is no chance you'll be responsible for maintenance or the equipment. You pay for kilowatts per hour, just like a regular electric company. Before we get into more specific solar loan types, let's go over some pros and cons of using solar loans. Pro number one, you pay less upfront. That can mean affording otherwise impossible solar upgrades and increasing your home value without having to pay for the system outright. And you can usually get pretty low rates. Pro number two, money back. Installing solar energy systems can mean tax credits come April. FYI, leases and PPAs don't count since you don't technically own the systems. Check your local and state tax codes for ways to save extra cash and add that into your calculation. You can make money with your solar system. Not a ton, but still. If you make extra electricity, you may be able to sell it to your local utility company. Just make sure they are already doing this with other people. Otherwise, I wouldn't bank on it. States like Texas also give bill credits for extra power, which is built-in demand for that extra power. And now, to the cons. An obvious one, I know. The effectiveness of solar panels depends on where you live and the amount of sun exposure your house receives. Seattle? Not great. Tucson? Now we're talking. It's a con, but it's a stretch. You might save on your energy bill, but then spend the same on renting the system. But hey, then it just costs nothing to save the environment. And on top of that, remember that by financing, interest will eat into your initial profits and savings. So just make sure you do some forecasting and see when your break-even point is. We covered leases, but what about loans? There are a few options, so let's shed some light on what might fit your unique situation. PACE, or Property Assessed Clean Energy Loans, are programs set up by the government that partner with private lenders. With these, you pay the loan off as part of your property tax bill over a set number of years, say 20 or 30 years. They're usually zero cash down and have good interest rates. But the key thing here is that these loans are attached to your property and not you as the individual. Meaning, if you decide to move, this loan will transfer to the new owner and can make selling or refinancing more difficult. But if you're in your forever home and want to go ahead and jump into solar, it could be a great option. Then you've got an EEM, an energy efficient mortgage. An EEM gives you rates for specific energy-based projects. They're called green mortgages too, and they can save you some extra cash on top of your mortgage or refinance, specifically for energy improvements. The catch? You have to meet more stringent requirements, like hiring an energy consultant to drop by and make a home energy rating report to estimate potential energy savings. This is just combining whatever other renovation projects you had in mind with your solar panels and packing them up. All standard loan recommendations apply. Just know that this means you'll probably be paying a higher interest rate. Some lenders offer renovation loans, and if you qualify for VA loans, you could get better rates. Home equity loans and HELOCs use the equity in your home, so the difference between your home's value and your mortgage balance, as collateral. They offer great rates and are a good way to get funding for projects. But the catch is that they put a lien on your home, meaning you could lose your house if you miss payments. If you're really confident with your financial life, these can make sense. While Rocket Mortgage doesn't offer HELOCs, they do offer home equity loans. There are a lot of options with solar, so make sure you work with a provider you trust. Make sure the terms fit your needs and understand how solar panels can impact your mortgage, home value, and obligations. That's no reason not to do it though. The tax credits for eligible taxpayers, environmental benefits, and money you can save on energy bills can be fantastic. Ready to see if solar is right for you? Head on over to Rocket Solar to learn more. If you'd like to see more videos just like this, you know what to do. Click right here. And don't forget, like and subscribe. Guess what? We'll see you next time.